Everything up for the day quite nicely. We see stocks up, the S&P 500 0.44%, NASDAQ 100 up strong 0.88%, even 20-year bonds up 0.46%, gold up 0.26%. Let's jump in particularly to these two stock indexes we follow and see how well our practice trades are going. Those of you who follow us every day, you know we had a weekly vertical crossover back on the week ending the 25th of January. And so far, going to the second week of decent up movement, derivative oscillator gaining upward momentum, price percent oscillator heading up quite nicely, price movement above both the 2-day and the weekly trend line looks beautiful so far. Again, makes you a little trepidatious, doesn't it? How herky-jerky things have been at times, but beautiful as we see things running up. On the 2-day chart, we can see the price percent oscillator still heading up nicely. The derivative oscillators losing just a little bit of energy. And of course, that latest 2-day candle ended. The latest full 2-day candle ended on Monday, so the one we have currently is just the first day of the 2-day candle, but it's up nicely. Price movement is above the wick of the prior one, so everything looks good there. And we go from the 2-day to the 4-hour. What do we see going on there? Well, we saw up movement in the morning, and then things pretty much just leveling off sideways in the afternoon. As we look at the derivative oscillator, it peaked all the way back on the afternoon of Friday the 1st, the derivative oscillator did. That little pullback is sort of what's caused that wave, and we saw sort of a stunt of it on Monday morning. Then things got going Monday afternoon, got going nicely on Tuesday morning, and then just a little sideways that afternoon. That's what caused the derivative oscillator to oscillate down a little bit, but that price percent oscillator still heading up, staying away from the red signal line. We'll continue to watch and see what we can see. As we look back, we see that typically the up movement has been between 3 and 4 candles. Well, 2, yeah, mostly 4, 3, something like that. The last huge surge that we had on that 4-hour candle was between the 4th in the morning and all the way through the afternoon of the 9th of January, and that was about 6 candles or so. So again, at some point we're going to see things level off, could rotate over going down, and again we can see the price percent oscillator getting flat on us as things went sideways. So if you're in the trade, practice trade right now, just continue to keep your eye on that 4-hour chart. And we'll just continue to see how things go along. Remember, our jumping in point was after the bump up on Thursday morning. We had the jumping in point that Thursday afternoon. So again, things have gone up quite nicely so far. Continue to keep your eye on that 4-hour chart. So we go from the weekly on the S&P 500 to the NASDAQ 100 is represented by QQQ. It again, weekly vertical crossover occurred same time as the S&P 500 on Friday, the week ending Friday the 25th. And we're going into our second week of up movement. This candle so far this week, just 2 days in, nice strong up candle. Looks beautiful, doesn't it? Price movement well above the weekly and the 2-day. The derivative oscillator gaining upward momentum. Price percent oscillator just hammering up. And we go from the weekly to the 2-day. What do we see there? First day of the latest 2-day candle. Derivative oscillator gaining upward momentum, which is pretty. And that price percent oscillator just rocketing up. It's sweet to see, particularly from the fact that we jumped into a practice trade on this, just like with the S&P 500 when that 4-hour chart crossed over in the morning, going up on the 31st. That was Thursday the 31st, jumping in point that afternoon. Things slid sideways for a day, and then last 2 days, hammering up quite nicely. Derivative oscillator lost a little bit of energy at the end of the day. Price percent oscillator still heading up, losing a little bit toward the end of the day. So again, keep your eye on the prize, keep your eye on that 4-hour chart. Hopefully you're having a successful practice trade so far. And are you using your trade worksheet? Trade worksheets are available for free in the show notes. If you're not seeing show notes, maybe you've not subscribed at our website, chartingwealth.com. We'll send you an email every day, And with that, you get show notes. And in there are PDF links to our daily market worksheet, weekly market worksheet, also a link to buy our book, Charting Your Way to Wealth. If you want to understand everything we talk about here on the channel, if you want to have a great understanding of the Heikin Ashi candlesticks we use, of the price percent oscillator that's like the MACD, but a percentage indicator, better than the MACD, I would argue. One of the students turned us onto that many, many years ago, and we've been using it ever since. You'll understand exponential moving averages, the derivative oscillator, our second indicator, all the reasons we do what we do, plus lots of great training at chartingwealth.com. And if you really want to go high tech, this is what we encourage you to do. Go to our Patreon page and support us, and you get all sorts of great things. Short chart training, you get the quarterly chart training, you get all sorts of great stuff. Plus, we're having a live Q&A for all of our Patreon members tomorrow at 12:30. The call-in number is going out to you in an email as soon as we finish up this broadcast. So we look forward to having you call in tomorrow at 12:30, and we'll spend about 20-30 minutes answering your questions. Okay, friends, let's keep moving through these charts. What do we see going on 20-year bonds? Up for the day, 0.46%, as I previously said. And again, the week, however, is a weekly, very weak candle so far. Basically, a red spinning top, almost a doji, means indecision. Good bit of indecision. Tending down. Things have just been sliding sideways. Price percent oscillator still barely up. Derivative oscillator losing upward momentum. So bonds are trying to figure out which way they're going to go. Still in a confirmed up move on the weekly chart. We go from the weekly to the 2-day. And the 2-day still in a confirmed down move. However, the derivative oscillator is losing downward momentum. But we see, again, the sideways slide underway and going into the 5th day. So we'll just continue to watch and see what we see. Price movement is above that weekly trend line, but we're in a confirmed down move on the 2-day. And of course, we go from the 2-day to the 4-hour. 4 hours also in a confirmed down move still. Maybe with, and again, the Heikin Ashi candlesticks are showing us some up movement in the morning and a sideways slide in the afternoon, pushing throughout the day. Of that, on that weekly trend line, maybe it'll cross over going up, and there'll be enough momentum at some point to drag the 2-day up. So there might be a trade up on bonds sometime in the future, but we have nothing right now. We're just waiting to see how things shake out. And you know what? That's okay. First rule of trading, don't do anything stupid and lose money. Second rule of trading, make money. Okay, so on bonds, we're not doing anything stupid. We're seeing how things sort out. Next, we go to gold, up 0.26% for the day. Gold, of course, had a weekly vertical crossover. Guess when? All the way back at the beginning of October. And it went up for 3 weeks, slid sideways for about 5 weeks, and then pretty much has been going up since then. Derivative oscillators losing a little bit of momentum for the week, and we can see how the price percent oscillator's fallen off a little bit. But so far, up candle. But when you look at the wick on the prior week's candle, it's not even up to that. So again, weak movement, but up. And we go from the weekly chart to the 2-day chart. And what do we see there? Well, falling off what was a decent trend line on the 2-day chart. The price percent oscillator's gone flat, maybe heading down a little bit. Derivative oscillator still gaining some upward momentum. That's from the oscillation of the 4 prior up candles. Again, nothing strong there in gold when it comes to that 2-day chart. A little bit of weakness showing there. And of course, where we can really see the downward momentum and sideways slide is in that 4-hour chart, crossing over, going down back in the afternoon on Monday. And again, things just weak at this point. And we'll just keep our eye on things and see what gold is going to do. Again, 2-day chart is in a confirmed up move, so keep that in mind. Gold on the weekly chart's in a confirmed up move. If you see some strong surging up in gold on that 4-hour chart crossing over going up, then you might have a jumping in point. So keep your eye on gold. Watch that 4-hour chart. You may be surprised as the week moves on. You might be able to do a practice trade there. Folks, that's where we are as we end the day on, what is this, Tuesday, and go into Wednesday. Hope you're in that practice trade on either the S&P 500 or QQQ, and that you make the right decisions in that practice trade and you have a successful one. And you get all you can get out of it on your virtual currency. Remember, we're not a stock calling service. We're an education firm, and we're always glad to have you tune in and join us. God bless, my friends. All the best from the whole team here at Charting Wealth World Headquarters by the book.